just before I came in here, I got an email from an independent trader who was saying, hey, I'm struggling this year. My playbook from last year is not working as well as it is this year. Can you give me some hints as to what I ought to be looking at? And one of the things that I shot back to him is, well, yeah, your playbook is going to be adjusted for this year relative to last year. And I'd say one of the most important variables for that is the Vixx, volatility.
Absolutely.
That it is lower. Now it shot up a little bit here from even much lower levels, and then is subsiding a little bit. But Vixx is much lower this year than it was last year. And you can't sit there and say, I'm going to trade the same way when Vixx is 15 as you do when Vixx is 25. That makes no sense. Those are two different markets. You know, for a long time we had Vixx even at 12. There are certain trades that work when Vixx is 12. Okay, for years, Vixx had trouble peeking its head above 15 for years. And then it did. And even when there was a difference between Vixx being 12 and getting above 15, there was a different playbook. Certain trades started working much better. And now, in this new era where volatility really picked up, you know, we're starting to look at measures of Vixx above 15, Vixx above 20, Vixx above 25. But when you're doing your playbook and you're archiving certain variables in your playbooks, you have to archive what the Vixx was on that particular day. And you have to take note and potentially think about different playbooks for different Vixx levels. So for a long time, I would do presentations like this and I'd say, if Vixx was below 15, around 12, we wouldn't play marketplace stocks. We wouldn't trade the overall market. And then I'd say, if it got above 15, we'd think about actually making market plays, looking at SPY and volatility and big caps that move with the market. And then if Vixx got above 20, then we certainly would be trading and looking at making market plays, trading the SPYs, trading volatility products. And you know, that was the guidance that we gave guys for years. And then we ran into the last 24 months where volatility is elevated. All right, but you know, my advice to that particular trader mostly was, you really need to pay a little bit more attention to volatility. Momentum trades are going to work better when volatility is higher.
Absolutely.
Certain fade trades are going to work better when volatility is higher. Market plays are going to work better when volatility is higher. Breakout trades are not going to work as well when volatility is 12. And so, you know, and when volatility is lower, RVOL becomes even more important in your stock. And so, and I see this a lot. This is such an important factor that you're putting in there for your playbook trades, adding the Vixx as a key variable to your trade and keeping note of that and keeping note of your stats when Vixx is 15 or 20 or 25 for certain trades, and noting that. If you want to learn 3 of the top trading strategies our New York prop firm uses to extract big profits from the markets month in and month out, check out our free 2-hour intensive awesome workshop. Just go to tradingworkshop.com.